I am Stephen Davis, Senior Market Strategist, RJO Futures. Friday, January 8th, here to talk to you about the grain markets, the agricultural markets. We started the year, January 4th, corn was 45 cents lower than a year ago at this time. Soybeans $1.38 lower from a year ago. So they're trending lower. These are bear markets. There's a lot of grain in the world. I always say that low prices is the cure for low prices. What low prices are supposed to do is improve demand and slow production. Demand is the key in here for our grain. Yesterday, the dollar was down sharply. Perhaps that's something that can happen here in the weeks and months ahead to continue demand driving our grain markets. I noticed this headline this week: South African corn prices 140% higher year on year. So major drought in South Africa. They are a major corn producer, a major maize producer in that part of the world. So here's an El Nino driven weather phenomena. South Africa is going to buy this corn that they need from Brazil, but still using up some of the grain in the world. Soybean market. China bought U.S. soybeans yesterday. That's impressive with the equity markets the way in China have they been trading this week. So granted, their currencies are lower. China are very good grain purchasers, and they're savvy. So their currency going lower, they come in here and buy U.S. soybean. Still impressive though. A week ago we had unknown U.S. soybean sales to unknown destinations. Many times traders look at this as China. Well, this was the Netherlands buying U.S. soybeans. That's interesting. With the currencies of the world the way they are, the Netherlands' position in the world where they live, and they're buying U.S. soybeans, that's impressive. So moving forward, this El Nino well documented. We'll pretty much expect, or we kind of know what to expect from El Nino. Now what follows next is La Nina, and we don't really know what's in store for that. Many times it's a weather extremes, and it's hot and dry this spring and summer. So this is going to be the next catalyst for price discovery. Analysts, traders are talking about this. Trend followers, managed funds, they're going to be quick to jump on the bandwagon this spring and this summer if it starts to get hot and dry. So keep an eye on that. Everybody's talking about it. We're going to be talking about it as well. Going forward, our Dow Jones this week, we're down 5% in the first 4 trading days of the year. That sets a record for this time of the year. This is not good for any type of markets, any grain markets, any commodity markets. So we need to see the weather. We need to see China and the world situation, financial markets settle down in here. So when the peasants of the world become consumers, the first thing to change is their diet, and that's what's going on in Asia. That's what's going on in China, and hence their diets are more like ours. Now, when manufacturing contracts in China, sure, the demand for grain is going to slow a little bit. China's purchases of U.S. soybeans are down 15%, 15% year on year. That's not 30%. That's not 40%. It's not 50%. So this demand for U.S. soybean is going to continue unabated in our lifetime. Everybody have an excellent weekend. Thank you. Options on futures may involve substantial risk and may not be suitable for all investors.